Hey everybody, this is Jose Blasco. We are about to start the session in 20 seconds. Can I have a quick sound check, everybody, please? A quick hello on the chat box would do, so I know you hear me and all is good to get started. Everything should be fine, but as always, quick confirmation is always very helpful on my end. So quick hello on the chat box, please. Very good. We just reached the top of the hour. Very nice. So we are live. Thank you for that. Let me turn on the video stream as well, so I can say hello from the corner right there. How are you, my friends? Good to see you. So again, welcome to the session, everybody. The session is now live. Today is September 22nd, 2020. Today it's a get-together short-term session, so we're going to be looking at futures as well as the Forex markets, and we'll be looking for opportunities that are actionable. If those opportunities meet our rules, we'll execute. If those opportunities don't meet the rules, we'll be looking at other markets until we find opportunities that do meet the rules. It's that simple in the end. Very nice. Disclaimer. Let me go ahead and give you the opportunity to read the disclaimer carefully. So please read it. Read every word of it, if that's okay. It's very short and it's very thorough. And it's important that you understand what to expect from this session, because this session is obviously for educational and instructional purposes, and there are a few more implications. I would like you to read this properly. I'm counting on you to have done that. Okay, good. Very good, everybody. How are you, Alan? Good to see you. Everyone else, good to see you guys. So the session is officially introduced, okay, and therefore it's time to go ahead and begin. So I'm going to close the PowerPoint presentation here and jump into TradeStation, and that way we can begin our session here. So you can see lots of red colors here on most of the climates, including currencies on the right. If you've been in the session before, you know that on the left I have the futures markets, in the middle and the right side I have the Forex markets. And notice how both currencies and futures, which means equities, commodities, treasuries, like everything is pointing down, or most of the markets worldwide are currently pointing down. Okay, so we gotta be careful in markets like that, because normally pointing down equals volatility, and while volatility equals opportunity, volatility also equals risk. And not only because price may move violently against you, but also because of the emotions attached to speed of movement, where you may get very euphoric if you were to get a few winners in a row, where you may get very fearful, or even worse, in revenge mode, if you were to get a few losses in a row. So everybody, make sure we all have a professional approach to trading, emotions under control. And with that said, let's exploit the market opportunities, but of course, always very careful. I mean, this is all the time, really. But when we see markets that are moving violently, of course, we need to kind of remind ourselves of that very simple concept, but just remind ourselves of it, in a bit more stronger fashion, if you wish. So it's very clear you don't forget. Okay, it's kind of like you're gonna start a sport competition, and before you have a chat with your trainer, reminding you of things that you know, but it's always a good reminder to start your competition that day, for example, if it's sports, with the right mindset. Okay, so in trading, mindset is absolutely key. Okay, cool. So let's begin, guys. And when looking at the futures markets, I don't have in the 15-minute time frame, which is the one on the top, I don't have any golden alert at this moment in time. This either suggests that I need to wait for a little longer until I get golden alerts, especially if you are short-term, like a really short-term trader, then you should, because those are 15-minute climates. So those are going to be trades that last, a few minutes, maybe an hour and a half, and that's it. So in those cases, you wanna, it's certainly needed to wait until the right opportunity arises. So you gotta be patient. If you're a multi-style trader, or you are a bit less short-term, then nothing wrong with looking at the 60-minute time frames. Okay, and notice that in this case now we have three opportunities, which is crude oil, natural gas, and the 10-year note. Those three guys are pointing here, and just freezing the screen here. Those three guys are giving us golden alerts. Okay, so what about we go ahead and we begin planning a trade on crude oil? We look at planning a trade on the 10-year note, as well as I said natural gas, isn't it? Yes, natural gas on the 60-minute time frame. So let's begin with those markets. Also, when loading commodity markets and markets as such, the very, very important thing you have to do immediately, okay, it's to go ahead, and I'm just bringing it to the screen right now. You need to go ahead and use a website such as barchart.com to double check that the market symbols you're about to use are the right expiration dates. Okay, it's not like Forex where currencies never expire. In the futures markets, we trade contracts, they have expiration dates. So if I was to start with crude oil and I was to check what is the right symbol to use on crude oil, so here on the top we can see the X letter is the one that is being suggested, and true it is that the X contract, here's the X contract is the one currently with the greatest volume and open interest. So when I move into my chart with TradeStation, if I'm not using the X, which I believe I'm not, I'm still using the V there. That's the last time I loaded this particular workspace. So I'm going to have to change that to CLX20 just to make sure I am charting the right contract and trading the right expiration date. Okay. So just loading it. PD here on the bottom left, that means pending data. So we're going to have the whole set of data loaded in just a sec. Okay, but in the meantime, let's begin planning for this trade, assuming the trade is valid, which I believe we have a trade in front of us, my friend. So let's go for it. So notice how we have here a defined climate. It's a confirmed climate to the downside on crude oil, and our reference price to take a short is 39.70. Okay, so 39.70, it's here. There is no red UFO at this point. 39.70 is here. There is no red UFO at this point, but here 39.70 is here, and indeed we are right in the middle of a red UFO, and therefore it is time to plan a trade utilizing that particular UFO to take a short. Okay, so let's go ahead and bring. I was using my web browser here earlier, so let's go back to the web browser. I want to load TradingView, because this is going to be very useful for me to plan the trade, to document the trade on the screen. So I'm going to be loading CLX 2020. Okay, that's crude oil. So CLX 2020, that's the market I want to load. And again, I'm doing this so I can use the order panel where we are planning on a shorting opportunity. Oh, wow, crude oil just got into the red UFO. We may be late to the party here. So 39.63. That's the value for the entry. Okay, so 39.63. The value for the stop would be above the UFO, which is 75 plus 1 is 76. Okay, so this is a trade where we will be risking $130 per contract, and I would be taking this trade with 2 contracts. We'll see if I'm still on time or what when I'm done with the trade. But before I'm done with the trade, I still also need to find out more about the location for the target. So the target should be located on the 60-minute time frame. It would be that particular UFO located at 38.92. 38.92, that would be the location for the target. So again, bringing that value here, 38. You know what? I just forget what I just said. My bad. That's what happens when you're thinking about multiple things at a time. Sorry for that. 38.92. Here we go. Now I got it. So 38.92. This is the location for the target, which is $710 of profit in case we're right. So let's see. We may still have the opportunity to enter the trade. The UFO is still there. So we have 13 ticks, which is 1.3 points, meaning that if I enter at 39, I need to bring a calculator so I can enter my trade properly. Here we go. So if we enter at 39.63 and the stop is 39.76, we got 0.13. I said 1.3 points. Sorry for that. Well, actually, that's how it's called. 0.13. And if we add that to 39.63, that means our safety target would be 39.5, which is lower. Okay, which is lower, and then the final target would be 38.92. So let me enter an order, and then I will explain everything, because if I don't rush this thing, we're gonna miss it. So let me go ahead and enter an order to be short with 2 limits and 1 stop, where the entry would be 39.63 with 39.5 is the safety target, with 38.92 is the final target, where 39.76 and 39.76 are the stop locations. Okay, did I get that right? Yes, 63.50. Yes, I got it right. So I'm just gonna send the order, and then I will explain everything on the screen. Yes, that's it. So we have the ordering. Okay, so now let me explain everything. Let me get back our trading view here. I was kind of not able to pronounce trading view. So what are we doing? We are relying on that UFO given the climate, okay, and 39.63, it's our entry. Okay, in case we're wrong and price goes above the UFO, that's 39.76, that's gonna be our stop. In case we're right, we are betting on a move all the way to 38.92 because there was a green UFO on the 1 hour time frame. But in case price doesn't get that far, at a 1-to-1 distance, okay, same distance from entry to stop, we projected to the bottom side, and that's 39.5. We're going to take partial profits, okay, removing the risk of the trade. Okay, we just got filled on the trade, by the way. And wow, crude oil seems to be quite energetic to the upside. Okay, so we'll see if price turns or it doesn't. And it's been coming inside the UFO quite aggressively, so we may end up hitting our stop, and if we do, then that's trading too, my friends. Okay, now in any case, okay, I want to also use this opportunity to talk about another aspect of this trade, which is absolutely critical, which is the time stop. Okay, the time stop. So we entered this trade right here on this candle, isn't it? So this is the candle where we got filled. You can see here, short 2 contracts, 39.63. This is the candle closing at 11.12. Okay, this is New York time. Each of those candles are 8 minutes. Okay, so this candle will close at 11.12. Okay, the next candle will close 8 minutes later, which is going to be obviously 11.20. Okay, and the next candle is going to close 8 minutes later, which is going to be obviously 11.28. So what's going to happen at 11.28? Well, 11.28 is our time stop. Okay, it's our time stop. In other words, we're giving ourselves until 11.28 to get to the safety target. Okay, so if this market goes ahead and moves and turns around and hit the safety target, we are out of risk and then no need for a time stop. But if the price of that particular commodity stays wandering around somewhere here in the middle and doesn't define itself, moving clearly towards the safety target and reaching the safety target, or moving towards the stop and stopping us out, so then manually we will exit the trade. This is what we call a time stop. And the rationale behind the time stop is quite simple, to be honest. Basically, we are in this, and this is a bad sign actually. A green UFO just showed up on the screen. So you could actually go ahead and manually exit the trade now, and you would probably save a larger loss. And that would depend on your rules, if you have a rule for that or not, or if you happen to stick around in front of your screen or not. But certainly the fact that we got a green UFO may very likely imply a change of climate that we will be able to see soon on the climate. Okay, and if that's going to be the case, then we're going to be stopped out. Okay, so we'll see what happens in the end. Certainly if you had taken a decision to get out of the trade and you took less loss, 160 instead of 260, I would understand that, as long as you do it as part of your rules. If you improvise it just because you get afraid, then that's not trading. Okay, trading means following rules. In my case, I'm just going to religiously follow with my time stop. Okay, even though that green UFO is certainly a bad news. And decreases the probability of this trade being a profit for me very, very much. But in any case, I'm going to stick with the plan. So at least I get the opportunity to demonstrate the time stop if I get there. Okay. So again, if I either get stopped out or I get to my safety target before 11.28, then nothing else to do. If I don't reach the stop or the safety target before 11.28, I will just close the trade manually, and that may imply a bit of a loss or a bit of a profit. It's not going to be amazing in any of the cases. It's not going to be too big of a loss. It's not going to be too big of a profit. But then you would get out of the trade, because if nothing has happened while you had all those different components of the trade in your favor, but nothing happened, either clearly against you, meaning we were wrong, the climate is changing, or clearly in your favor, meaning we were right, the climate is propagating, more UFOs are added, etc., etc., So then basically you would stick around for longer, just hoping for the best. And hoping is certainly not something that we do as traders. While it's a human thing to hope, we want to avoid any sort of hope, and time stop is going to be a powerful tool to avoid that. Okay, so right now we are talking about 11:14 in New York. So again, we still have another how many minutes until 28? So we have another 14 minutes to go until we hit 11:28, and we will then see what needs to be done in this trade. Okay, so since we just started the session, it seems that we will still be together in the room at 11:28. So I'll be coming back to crude oil and check if anything else needs to be done or not. Okay, notice how price was trying to go down, but the moment it hit the UFO, it's just bouncing up again super fast, one tick away from the stop. So we may be stopped out on this trade. As I told you, that green UFO is really a bad news for the trade, because basically what happens is that the sell on field orders were canceled and replaced by buy on field orders. Okay, at least at this moment in time. Okay, again, if the climate continues its propagation, so little pockets of more sell orders will come in, and potentially they could exhaust all those buy on field orders, and then the trade to continue. But again, we are giving ourselves a limited amount of time to be in this waiting stage. That's why we use a time stop. Okay, so very mechanical on the approach, guys. If you're right, you're right. If you're wrong. But certainly we don't want to be there, hoping or wondering, when should I get out? Is it good enough for me to stay? Is it bad enough for me to leave? Again, rules, always rules, only rules. Furman, how are you? Good to see you. Very good to see you. So I'll be back to this chart of crude oil so we can just continue looking at what's happening in this particular trade, either begin progressing in our way or not. Again, as I said, not looking good at this moment in time. But in the meantime, there are other trades to execute. So I want to go and take a look at the climates. And when it comes to climates, actually, apart from the other markets I was going to check, like natural gas on the 60-minute time frame or the 10-year note on the 60-minute time frame, we got a few more opportunities that are arising on the 15-minute time frame with crude oil as well. So I'm going to leave that alone. But we also have gold and the Nasdaq. Okay, so therefore, I would like to go ahead and turn on gold and the Nasdaq on the 15-minute time frame, NQ and GC 15-minute time frame, and let's go ahead and check those markets to see what we've got. Okay. Also, gold is a commodity, so as said before, it is important to make sure and confirm you are using the right contracts. So I'm going to move here into metals and check that I'm going to be using the right gold contract. It suggests to be the Z, and yes, indeed, the Z is the most liquid one. Okay, so we're going to be using the Z contract for gold. Okay, so and I have it here, GCZ. Quick look at crude oil. Since we are still in the trade, let's see what happened. Still doing its thing, 11:17. So 11 more minutes to go before we get out of this trade manually. Yeah, 11 more minutes to go. So back to gold, and let's see what gold presents for us. So here's gold. We have a down climate similar to crude oil, and similar setup than crude oil actually, because 1911.7 is the reference price for us to short, and that falls inside that UFO. In other words, we have two UFOs that are grouped, okay, using that collection of UFOs, expecting gold to continue to fall from that UFO. It's absolutely a reasonable approach, given the climate, given the confluence with the UFO and the EMA, where those UFOs are enveloping very well the EMA. Now, there is one thing that is making me uncomfortable here, which may be the reason for me not to take the trade. And I want to show you this here. Let me go ahead and change the symbol to gold. So we said GCZ 2020. Okay. So GCZ 2020. And the one thing that makes me uncomfortable is that if I was to take this trade in the bottom part of this UFO, okay, that would be 1910.3. Okay, so 1910.3. And if I was to take a stop all the way above 13.4, okay, which is 13.5, Okay, notice that would imply a $320 risk per contract. If I do two, it's 600 over contracts. And while it's fine to take the trade, I'm not going to do it because I understand that the majority of you probably are in learning stages and probably suggesting that you execute a trade with 600 over dollars of risk. It's probably a bit too much. So what is the problem here? Well, the problem and the beauty at the same time is that the fact that we have two UFOs overlapping each other, in one hand, is creating more power for the market to move down, but on the other hand, it is also increasing the distance between what the entry would be and where the stop would be. And because we got a very large vertical distance, we also have a larger risk. Okay, so in this case, we are not going to take this trade. And gold is moving down. Let's see if we have a confluence with crude oil. No, crude oil stop us out. So we've been stopped out of the trade with crude oil. Yeah. So again, not a clear one. While the trade with gold, as you can see, is working perfectly. And to be honest, if you had taken the trade here with a stop there, okay, so basically the vertical distance I was talking about is here. So right now we would just be hitting the safety target and we would be out of risk. Okay, so the trade would have worked, but again, you would need to be ready to risk 600 over dollars for this trade in exchange for making many more. But again, I'm trying to be well balanced and knowing the nature of many of our channel subscribers and so on, where many of you are in learning stages. So this is a trade I would suggest not to take. Okay, now, can you go ahead and trade the micro gold contract? Yes, you could do that. Okay, so instead of trading, let me do it here. Instead of trading GCZ 2020, okay, which as you can see is bringing gold futures. If you add an M in front, okay, that's the micro gold futures contract. And if I was to take that and I use the same price points, okay, which is 10.3, and then on the top I use 13.5. So did I do it right? Yes. So notice that now we are talking about, instead of $320 risk per contract, we only have $32 of risk per contract. Times 2, that's $64 of risk. So I guess that now everybody's happy or more comfortable taking this trade. The micro E-mini contracts are 10 times the size of the E-mini contracts. So certainly that's an advantage. But not all futures markets got micro E-minis. Gold does, but for example, crude oil doesn't. Okay. So anyway, done with the trade with crude oil. That was not a successful trade. So we closed this workspace. We are done with it. We didn't have to wait to 11:28. The trade with gold, while it's valid and it's working, and if we had been a bit faster, we would be in and it would be valid, but we didn't. So I'm just going to close the workspace and focus on other possible trades that we may have available. So looking at the NASDAQ. So what do we have when looking at the NASDAQ? Well, with the NASDAQ, we have a confirmed climate, thick and red, and the reference value is 999, okay, 999. Which is more or less right below 11,000. Okay, so right below 11,000, right below 11,000. Notice how none of the charts are providing us with red UFOs. The red UFOs are higher, but not there. Okay, not there. So while the setup theoretically works, in the real world, we don't have the UFOs we need. So I'm just gonna close the workspace and go back to my red screen. What else is the market offering us? The S&P futures, ES. It's a new one. So let's go ahead and open the S&P futures, ES15. Hey, Boyan, how are you? Good to see you. So let's go ahead and do that. Here we go. So with the S&P, so we have a confirmed climate, okay, thick dot, it's confirmed. And therefore we should approach trading in this market as being a seller. 34.75 is the selling price we're looking for. 34.75 on the left, there is nothing. 34.75 in the middle, there is indeed something. And 34.75 on the right, there is a lot. And that just killed me. Okay, that just killed me, because if you think about what I said earlier about gold, where we had two grouped UFOs, and that created a problem for me because my entry was below, the stop was above, and therefore the vertical distance was a lot. So my 1-to-1, my safety target was going to be very far. Well, imagine now in this particular case where we don't have two UFOs overlapping each other, we actually have four UFOs overlapping each other. So that setup is super powerful, but certainly it's not a trade I'm going to take because from a risk management point of view, it's very weak. I need the price of the S&P to travel so far to reach my safety target that makes my safety target to not to be a safety target, but just a target. Okay, so I'm not adding risk management to the table and not adding risk management to the plan, and therefore I am at a disadvantage. Okay, because in the markets anything could happen anytime, and protecting our risk is absolutely a must. Okay, so no safety target or not a good location for the safety target equals no trade. Okay, good. So let's continue, guys. Okay, let's continue. And a little bit of patience. That's how we find trades. So crude oil in the 15-minute time frame. I mean, the one trade in the 60 was not what we were looking for. What about the one on the 15? So let's look at crude oil on the 15. We're gonna be using the X symbol in it. So at CLX20. Okay, at CLX20. And let's see what's happening there. So we have 39.75. 39.75 is the location is the reference price for our short. The dot is thick and red, so it's suggesting that we are a seller. That's the price. Okay, that's the price. That's the price. But there is no red UFOs, at least for now. So now we wait a little bit, and a UFO may form. Here we go. A UFO just formed right here. That was not there before. That one starts at 75 and has the top part at 83. So guess what, my friends? We are going to re-enter this trade with crude oil at 75 with a stop above, which is going to be, what did I just do? I just clicked on the wrong place. That was a dangerous move. Sorry for that. 75, we're going to have a stop located at 83. Wait a minute, I cannot do this. So let me close this trade, guys. Let me close this trade. Why I cannot do this? Because my stop would be located where that UFO is. So in other words, I didn't notice, but the top of this UFO overlaps with the bottom of that UFO. So if those two UFOs were on the same chart, it would be like we have seen in other cases, like two grouped UFOs, and then it's killing our risk management. So I guess in this 1 hour from 11 to 12, it's not the time for us to go ahead and trade crude oil. So no worries, there are more markets to be traded, so we'll be looking at more. We have another opportunity now showing up from the Dow Jones, so I'll do that, and I guess it's going to be my last futures check before I move into Forex as well. Just trying to get one futures plan ready, and we can place the order, and then ideally I will move into Forex then. But of course, the boss is the market, not me. So I will adapt to whatever it's available. So thick dot again, down climate on the markets. 97.6 is the reference price. Okay, so 97.6. It's certainly inside that UFO. This UFO begins at 96 and at 27.008. So 97.6 is in the middle of that. So so that's good. Now I am a bit concerned with overlapping situations here. So 27.008 is right. It's right here. So ends here. 27.08 is right there. So yeah, so it seems that it's all good. Now, is the vertical distance maybe too much? So let me take a look at this on the order panel. So YMZ 2020. Let's go ahead and look at that. So if we were to do an entry utilizing that UFO right there, which is 26.960. Okay, and our stop was to be located at 27.009. So we are talking about $245 risk per contract. Again, we are talking about pretty hefty risks, and the reason why is because given the fact that market volatility is high, many of those UFOs are I would call them fat. Okay, and therefore they create, even though in this case, I mean, we do have overlapping UFOs, which is a problem, but here on the left, it looks like it's only one, isn't it? But even though it's only one, it's a fat one. And I mean, the fact that many other overlapped, it's a bad sign. So I'm gonna pass, guys. I am gonna pass. Patient space. Later in the day, I am sure better opportunities will arise, and patient space. I don't want to get into trades where getting into safety takes too much because my safety target is way too far. So in times when markets are volatile, you may have to go through situations like that. And again, patience and discipline will keep you alive and benefiting from the market, where irrational behavior or not having patience is the recipe to really get in trouble. Okay. What else do we have? Well, the Russell is giving an opportunity too, but given the time, we basically got 15 minutes left before the session is over. So if that's okay, I'm going to change topic and leave futures alone, and I'm going to move into Forex. We have the US dollar, Canadian dollar there, giving us a near sensible opportunity. So let's go ahead and change topic now, and let's begin planning some trades using the Forex markets. Okay, so USD, CAD, that's the type of opportunity that we are looking at now. Fairmont, there is no shares or ticks in TradingView. There is no. There is something called range charts. Okay, range charts, which are very powerful too, and you are about to see me use them. But there is no share bars or tick charts in TradingView. Let's face it, TradeStation is a superior platform, even though, to be honest, TradingView it's quite amazing, really. But again, TradeStation it's a more advanced one. Okay, so I'm just gonna move to I'm gonna connect with the paper trading of Wanda, just so when I utilize the order panel, it works with Forex, because TradeStation, I was connected with TradeStation in TradingView, but TradeStation is not a Forex broker, so it was giving me an error message on the order panel. And with that said, so we are looking at US dollar, Canadian dollar on the 60-minute time frame. Okay, US dollar, Canadian dollar on the 60-minute time frame. So when you look at my setup, I would like you all, please, to ignore everything on the right and focus only on what I have on the left, which is the 1 hour time frame combined with the 8-minute time frame. This is what I'm going to be trading right now in this particular case with the US dollar, Canadian dollar. Okay, so let me also get rid of UFOs with a need, just to make this not a confusing one. Okay, so here we go. So let's begin with our analysis then. Okay, so as we know, given what we saw on the radar screen, so the US dollar, Canadian dollar in the 1 hour time frame, it's giving us a confirmed climate to the upside, thick dot, blue color, confirmed to the upside. So we want to be buyers. And our reference price to do the trade is 33.15. Okay, 33.15. So if I look at the 8-minute time frame and I do turn on my AutoUFOs, okay, the place where I happen to have buy on field orders is lower, is 33.07. Okay, my reference price is 14, but the on-field orders are below that. So could price go below and then bounce? Yes, of course. But the real power of confluence is something like that. Okay, something like that. That's what we're looking for. Something like that to the downside. Same thing, right? So going through the EMA is not something that we're looking for, and therefore we want the UFOs to envelop the EMA. That's the ideal setup, isn't it? So the 8-minute time frame is not giving me that, but we can check the 8 ranges time frame. Okay, so let's look at 8 ranges. Okay, and notice how we have UFOs available all the way from 113.12 to 133.08. Okay, now to be honest, I'm gonna say that's good enough, because the current value of the US dollar, Canadian dollar is 21. So if the Canadian dollar falls and falls and falls and falls and falls and comes into these UFOs, what's going to happen to the EMA is that from 15, it's going to drop a bit, and I would be pretty positive it's going to hit that value of 12, okay, or 12, 13, something like that. So in other words, we didn't find the UFOs we wanted on the 8-minute time frame, but we found the UFOs we wanted on the 8 ranges time frame. Therefore, I'm going to input what my buying price would be here on the order panel, which is 133.12.9. Okay, 133.12.9. this is the value. And I see a few notes there on the chat box. I'll be with you in a second, guys. 133.129. Now, of course, we want to use 4 decimal places, so I need to do an adjustment first. Because it's a buy order, I'll adjust up to 13. And then because it's a buy order, and I buy from the ask, but the chart is the bid, I'm going to add 2 more pips. So that's going to make the entry price to be 133.15. That's going to be my buying price. The stop price right now, based on what we have on the screen, okay, we need to be located. Let me rephrase that. We need to be located right there at 133.094. Okay, but what happens with the stops? Well, first we're going to have to adjust to the 4 decimal place, and that's going to be a sell stop, so it's a sell order. So we're going to adjust down to 9. And then the other thing that we do with stops is that we always add 5 pips of breathing space given the decentralized nature of Forex trading. So 9 minus 5 equals 4, right? So that would be the location for my stop. But if you remember, if I go back to the 8-minute time frame, okay, if my stop is going to be 133.04, well, guess what? 04 is going to be right there in the middle of that UFO. It's going to be right there in the middle of that UFO. And my risk is that I am stopped out at 4, and then because there are more unfilled orders in this price range all the way to 96, then after being stopped out, price came down, stops me out, and then after being stopped out, it goes all the way. So I cannot do that. Okay, I cannot do that, and therefore I'm going to have to use 96.4 as my reference for the stop and do the math again. So 32.96.4. Okay, that's the value that we got from the chart. I'm going to adjust it down to the 4 decimal place down because it's a sell order. That's 96, and then add a breathing space of 5 pips, meaning subtract 5 pips to 91. Okay, so we are dealing with a 24 pip risk, which is a bit exaggerated given the fact that we are dealing with a 1-hour climate. Okay, so I'm not sure how it's going to be, but let's take a look at the target. And if the target is very far, so maybe okay. But if the target is not so far, then it may not be okay. So when looking at the 1-hour time frame, notice how the target will be located at 133.75.2. Okay, 75.2, where it's a sell order, isn't it? It's a sell order. So if I adjust it down to the 4 decimal place, it's going to be adjusted to 75. So in other words, we are risking 24 pips to make 60 pips. Okay, that's a 2.5 to 1 trade. Of course, we're going to take partial profits at the safety target, which is 24 pips higher. And guess what? In the end, the trade is valid. Also, 60 pips is certainly a reachable amount in a day for this particular currency. If you look at the ATR, you will see 60 pips a day is not a crazy number. And given the fact that the climate just started, and in that time frame, the climate could last 6 candles, which is 6 hours. So we're giving ourselves, let's call it 6 hours to get to that target, which I would say it's achievable. Okay, so let's write it down on the screen because, my friends, we do have a valid opportunity. Okay, so final target, it's 1.3375. Then below we have the safety target, okay, which I need to calculate. Then we have the long entry, which we said is going to be 1.3315, and below we have the stop loss, which is 1.3291. So from 15 to 91, we got 24 pips. That means that our safety target is going to start from 133.15, which is the entry, and we are going to add 24 pips above that number, and that's going to bring that number to be 39 if I did the math correctly. So entry 33.15, stop 32.91, safety target 33.39. Starting from there, you'll be out of risk on your way to see if that final target is going to be reached all the way, being 133.75. Okay, so hopefully you guys had time to take a screenshot. I'm going to go ahead and read your questions in just a minute. Okay, And let me take a look at the chat box as well. So, Koyo, this session is a moment that I have oftenly waiting. It's good to join you, Mr. Jose. Thank you so much, Koyo. That's very kind of you. Thank you. Fermon, so when trading futures in TradingView with my UFOs, I can only use time charts, right? Yes. You can also use ranges charts, but you will need to do a little bit of back testing there because, of course, every futures market is a different animal. So I would strongly recommend you to do some back testing to understand what you got in your hands, okay? Now, by the way, the price of the Canadian dollar is coming down, okay? So as we speak, this will be an entry, okay? So our entry was 15. This is now hitting 14. So I didn't place the order, but we are in a trade. If you did place the order, we are in a trade. And now it's all about seeing what's going to happen and be ready for anything that's going to happen with our stops in place. Remember, we always use stops. Be safe, my friends, okay? Cool. So let me see. What else do we have? Back to TradeStation. So lots of movements in many markets out there. Yeah, the future market is available. Probably there are opportunities available now, but again, we only have 5 minutes to go, so I'll skip the futures markets. Still, opportunities seems to be flashing on equity index. Okay, so that's what it is. With forex, with the majors, I got nothing else. Okay, notice how the center part of my screen, it's all majors. We got 60-minute climates, 240-minute climates, and we also have daily climates. Okay, so but there is nothing else that is flashing. So the trade with the Canadian dollar really is the only one. And as said, we are in this trade right now based on what we have seen. Okay, so let's have a quick look to cross pairs. Okay, the one cross pair giving us an alert here on the 240-minute time frame is the GBP AUD. So let's go take a look at the pound Aussie. Okay, pound Aussie. So GBP AUD. And we are looking at the 4-hour time frame. Okay, so please ignore the charts on the right now. Sorry, on the left. Also ignore the charts on the right. So we are now focusing exclusively on the charts in the middle. Okay, so only charts in the middle. That is what matters now. So climate, it's telling us that it's confirmed. Thick dot, red color. So we should be sellers of the pound Aussie, and our reference selling price is 42. Okay. Now, when turning on AutoUFOs, do we have anything at 42? No. The nearest UFO is located at 72, not 42. So again, we are using the 21-minute time frame here. So instead of 21 minutes, one attempt could be to look at the 21 ranges. Okay, 21 ranges. And when switching this chart to 21 ranges, it's taking a while, I'm not sure why. Here we go. So let's see what we've got. We found a collection of UFOs, which unfortunately, they end at 41, being our EMA reference value located at 43. In other words, you could imagine the EMA is on top right there. Okay, so those UFOs are below the EMA. Those UFOs are not enveloping the EMA like we had earlier in the US dollar Canadian dollar chart. Okay, so I'm gonna go back to my time chart just to be organized. But this trade is not to be executed. We don't have the rules being met at this moment in time. Okay. What else we have available here? We have the Aussie Swiss franc giving us an alert on the daily time frame. So let's take a look at the Aussie Swiss franc. That's going to be the potentially the last trade of the day. So Aussie Swiss, correct. And we're going to be looking at the daily time frame. So now please ignore everything on the left. And we focus on the charts on the right, where the one below is daily and the one above is 55 minutes. Okay. So you can see confirmed climate. Okay. So we should be sellers of the Aussie Swiss, and our reference point is 22. Okay. 22. So I'm going to turn on the UFOs. Okay. Oh, by the way, For whatever reason, I got my chart set up as percent. Okay, and notice how the UFOs that we have available are located at 41. Okay, they are located at 41. The reference is 22, so that's too high. So again, I'm going to do the same thing. I'm going to switch to 55 ranges to see if the setup it's allowing us to plan a trade. So let's see what we've got. We have some UFOs there. 41, okay, all the way to 41 and higher, okay, 41 and 99, but there is nothing at 22. So no trade on the Aussie Swiss franc either. Okay, so those trades are not valid. They don't follow our rules. They don't meet our rules. So taking those trades would not be recommended. So before we conclude, I'll have a quick look at the US dollar, Canadian dollar, just to see what's happening. Yeah, so the trade was taken there at 15, right? And since we enter, now it's moving up to 17. Okay, so this is the very, very beginning of the trade. So this means absolutely nothing. Anything could happen. Okay, but yeah, we did have a little bit of a challenging action there to the EMA. The climate is still the same, so we are still to be and remain in this trade. Certainly, you can use the time stop rule on the US dollar, Canadian dollar, like I demonstrated, or I was going to demonstrate earlier today on crude oil. But again, this is the very beginning part of the trade. When you enter a trade, you should expect a little bit of zigzagging action until price finally picks up direction. Okay, so we are at that time. Good. So my friends, checking for the last time the questions on the chat box to see if anything was not answered. No, it seems that everything was answered. So hopefully you guys enjoyed the session, my friends. I want to thank you as always to join me today. It's always a super pleasure to have you here. So thank you, and you guys keep up the good work. And if there is any question as you do your practices and you need support, remember, support at tradewithufos.com. That's your ally email address. Send us an email and we will assist you with responses to your questions and so on, guys. Okay, cool. Everybody, you guys take care. See you soon. Bye bye, everyone.